Hi there, traders. This is Brad Goodwood with the FX Market Insight for Friday, the 12th of March. All right, super interesting 24 hours or 16 hours as we went through that North American session and through Europe. We had the ECB, who was a little bit dovish. No change in rates as expected, but they did come out and say they were going to start buying, I think, some bonds to try and prop up the market. Now, let me just take you over to the news here. So there's a number of things in play here. Now, there's been a number of big bond issues in the States, which has sort of stabilized and steadied the ship as far as the yields go. But sorry, let me just bring you back to this other page. Having a look at the yield, the Treasury prices, right? So you got the short dated stuff, the 2, 3, and 5 year prices going up, so the yield going down. The 10-year and the 30-year price still going down, so the yield's starting to edge up again. It's one of those, we're in the balance. You know, the Treasury yields were a massive story last week, all week this week. Now they've sort of steadied themselves, but they haven't gone down. So I still think the dollar is going to come back here. This is a bit of a short-term knee-jerk reaction to a number of different factors. And don't forget, we've had the Bank of Canada this week. We've had the ECB. There's a lot of other intrinsic things pulling the dollar around. And the equity markets have had a cracking day as well. The NASDAQ's bounced back, probably with, the rise in the yields, the Treasury bond yields has sort of stabilized and not going up so much. So the equities are rolling with that sort of momentum as well. But if you come back down here, and I'm just on the markets, the foreign exchange news here, you can sort of capture around what's going through the market. You've got, talk about the ECB here. Still a dovish ECB. You've got to keep this in your vault, right? In your memory bank, because when this initial dollar weakness fades, you know what? Things in Europe are pretty crap, right? So I think the euro is going to turn down. I still think this move in the euro is corrective, but the fundamental shift, what we saw at the start of the week where euro was trending down, we had Treasury yields going up in the States, dollar strength. Now, Treasury yields have stabilized. US CPI came out pretty benign as expected. So that was a bit of just a lackluster number. The market can sort of walk away from the trades they've opened, take a bit of cash off the table. We have the ECB. You've also had, as I said, the Bank of Canada. I think there was one official here saying that an increase of savings, said spending of excess savings could lead to a stronger economic recovery. Now that's like year one of high school economics. Of course, if interest rates are low, the idea is you get people spending their savings. And I can't believe the market's moved on that. But once again, if it's an official finance minister or a Bank of Canada official, it makes a bit more credibility. So dollar CAD. So you've seen a real shift here. Now, the market was exceptionally primed for dollar strength, as I was, right? Up until we had those US CPI numbers where euro started trading sideways. That was the time to get out of that opportunity. Now, I spoke to our trader development guys yesterday about there's a potential short squeeze on, like coming into an event, understanding when a trade is stale. I'll come back and do a separate video on that and give you a link to it, because you need to understand when the fundamental shift of the trading opportunity has adjusted and you need to adjust with it. So we've seen the dollar index, right, trending up, trading a little bit sideways. Now it's just a bit of a clean out to the downside. We need this to stabilize, and then I still think it will come back, but it's going to really come down to the treasuries. Do they stay where they are? Do the 10 and 30 years keep going up or not? And we'll work it out from there. But what we are seeing is a massive shift again. Like we had all these trends going down, lots of stops triggered on the top side. Sterling, Aussie, Kiwi all bounced, and you can see dollar CAD there as well, loving the pressure off it with the that it was struggling to go anywhere with a strong dollar. You can see here where the pressure side was. You put a bit of weakness in a strong oil market. You got dollar CAD, 100 points lower as well. Dollar Swiss doesn't really want to go too far, and you'd expect that because it sort of mirrors the dollar index very closely. And dollar yen just cruising sideways. Now, there's a couple of key things to keep an eye on. Obviously, looking at the Treasury yields. Okay, this yield curve is sort of flattening out a bit at the top here, but it's, the Treasury's still in play. But check out the Volatility Index, right? This is where you can sort of gauge the market's nervousness around what's going on. The volatility index has dropped back down to 21. My sort of threshold is under 20. It gets like really quiet markets. We want it at least around 20, around here somewhere, because you want some volatility in the market, right? To give us these moves that we're seeing, all these opportunities. But it does tell you around investor sort of confidence in the market. They're pretty happy with where things are, right? And so the what's going on. Equity, as I said, follow the trail. Treasuries, it's becoming a bit less of a story now that the treasuries are sort of stabilizing and the yields aren't going as quickly as they are. We're starting to see the equity markets bounce, and then you're looking for that risk on, risk off profile. Now, the clocks have changed over from 5 p.m. New York, so you can't see clearly here the color tones, but massive risk on day, the dollar block all up and the dollar pairs down. It was one of those classic moments, right? So if the treasuries come out of the news, well, then we're back to looking at the equity markets and the various news articles which are going to drive those opportunities. Now, we're talking more about fundamentals here now than we have done in the past year, right? We've got this stimulus package to be rolled out. Don't get too caught up in the news with regards risk on, risk off stuff. I mean, like it's optimism lifts riskier assets. It's like that fades day in, day out. They use it every second day, so it sort of bugs me. But what you want to look at is the little bits and pieces that are driving, say, the CAD, driving sterling. Now, the big sterling move is it's mainly dollar weakness, right? And the market sort of was getting massively short sterling. All of a sudden, the dollar weakness turns around. Treasuries yields stop going up. And it's back to they're using the vaccine story again as the big story, right? The rollout of vaccines. Hopefully they get a successful rollout. But it's regurgitating the same news that's been coming out over the past number of months. And to me, you can't just keep coming back to the same old story. This is like a dollar move. We had a massive rush into the dollar. Those positions have been stopped out. Now we're sort of back trying to put the pieces together and look for that next move. It's a bit disappointing, if anything, because if those treasury yields had kept on going up, we would have had a very clear trading opportunity on the dollar across the board. We're just going to wait for that to build up. I don't think it's over yet by any stretch, but the general down move that we saw over the last week or so has completely diffused. And with these currencies sitting above these trend lines, it's just going to be a little bit loose trading coming into Friday. There are some UK numbers, but we now the market will lack confidence to go with what direction we need the build up again. Whether that comes from the US Treasuries or something else, we'll have to wait and see. But as you go through today's trading, you want to just keep an eye on sterling. Sterling is a hot topic. To me, it's hard to pick. Manufacturing output, production numbers are important. GDP numbers are important as well in normal market conditions. Maybe they'll sort of build a story around what's going on behind the scenes in the UK economy. And outside of that, well, you know what? It's time to almost start planning next week. But the last big kicker will be the Canadian employment numbers. Dollar CAD is, and it's had a big move to the downside. Employment numbers, is it any good? I don't know. It's going to be interesting to see what happens. I think it should be a pretty vanilla opportunity. Strong Canadian numbers. Dollar CAD goes down a bit further. Really weak numbers, right? And this is, I think, where you get exceptionally weak numbers across the board here. Then you come back and look at dollar CAD with that move. Let me just take you back to that page. So this massive move, it's really stretched. It's massively oversold. You get really weak dollar CAD numbers here. It should be back up towards 126 pretty quickly. So there's a chance there for a bit of a retracement. Market's getting short. Could be a kicker if the CAD employment numbers are weak. If they're strong, well, it's just going to keep dribbling to the downside, but it's already moved. You know what I mean? All right, so that's where I see things at this stage. It's a little bit disappointing, the fact that the whole trade, the dollar trade, has diffused itself, but the things can change pretty quickly, right? I still expect it to sort of come back, but you know what? The market needs some evidence to support that, support that view. And until that happens, I'll be sort of sitting on the sidelines waiting for the next opportunity to prop itself up in front of me, and then you jump on it. All right, guys, have a good trade day. Cheerio.